You should feel comfortable turning your cameras off if you want, although I'm not going to share this, your faces. Okay, here we go. Oh, I gotta shrink this. So here's the 8 days in question, the 5 days that are covered by the reporter in red. The purple is the 3 days afterwards. And normally we go through this, and I will go through this. The 5 days down is essentially a trend week lower, but the 8 days altogether are a round turn normal variation day. What does that mean? It means the market's unchanged on the week on these 8 days, the 8 days covered. Okay, so the thing that jumps out at me, didn't jump out at me when I circled back and started analyzing it, was the open interest on day 1 of the 8 days is the same as it was on day 8 of the 8 days. And the market is $15 higher. Okay, so that's a room to run sign, meaning if there's speculative money to come into the market, it's not in the market yet, at least not enough of it. Now they could change Friday's numbers, right, Randy? They could up that by another 10,000 by the time we open, and then it could be a little bit less. But between now and then, I'm operating on the assumption that it's accurate. Okay. So first thing that jumps out at me is on this move from here to here, we're $15 higher, and open interest is essentially unchanged. I think I drew that. All right. So building out on that a little bit, just to give you some ideas, not trying to bias you, but here's what just happened. Open interest is essentially unchanged, and the market is about $15 higher. So I started going back and looking at every, mind you, statistics lie, right? If I'm cherry picking, I'm lying. So I'm not cherry picking yet, but I haven't looked at every data point. I decided to look at where the market was when last time the market had 445,000 lots of open interest. And there's a couple in here, but there was one that was very clean from the low to the high in the open interest. And I started with this one. So on this day here, where the market's right there, the open interest was at 445,000. At the next turnaround, if you're looking at the cycles here, actually it could be lower, but it's not. All right, open interest went up by 40,000 contracts before it started turning. So 40,000 speculative longs. This is only specs. We're not looking big picture here. Speculative longs equaled $90. All right. So here we are again, 445,000, and we're now trading at 33.71. The last time we were at 445,000, significantly, we were trading 33.30. So we're in a margin of error, but the market is higher with open interest unchanged on almost all time frames. So it would give you the implication that we're running out of, the buying is running out of patience, and the selling, whether it's there or not, will be tested again soon, I think. And I'm not calling for a breakout. I'm just saying it'll be tested again. All right. All right. So day 1. So let me see if I can make this a little bit bigger while I'm doing it. So day 1 is, I don't want to have to scroll back and forth. Hang on. It's going to make you seasick. All right, I'm going to stop sharing for a second and open the picture up separately.
Vince, we're going to have a short week this week, right, with the holiday?
I think so. Yeah. I mean,
light trading.
Labor Day. Yeah. That's right. Hardnet is on holiday. I forgot Labor Day was coming up. Yes. Yes. Uh, I'm looking for,
The holiday's Monday though, isn't it? A week from tomorrow?
yeah, yeah. But I mean, this is the last shot of the holiday, so a lot of your bigger players are taking the week off. Not that that matters for trading, but yeah, it is shortened. All right, so let me share again. All right, so you guys can see that. And what I'll do is I'll read what I wrote without scrolling back and forth. And that is here. Let me get it off the screen. All right, so here's the 5 days. The first day is a day that's open. You can't see it because it's hidden by the red line. Day opens strong, finishes weak, green on the day. Wait, 1, 2, 3, 4. No, here it is. Day opens strong, finishes weak, up on the day. Not that one. Down day, doji with a long wick above, doji red, long wick below, long wick above, and a red, firm red trend day candle. So the first day is, this is me just doing my work, right? The first day is a short covering rally. And the reason I do this, if you're not familiar, is because I want to make sure the market is behaving in its normal behavior patterns. If it's not, then all my assumptions go out the window and I have to think differently. So this is a confirmation for behavior. All right. So day one, short covering, market gets knocked down, finishes green. Day two, more short covering, profit taking comes in, and then the market finishes red on the day. So the selling here is overwhelming. By the way, notice where we stopped. The selling overwhelmed us on these 2 days, and it looks like it's just clearing it out now, which could be good. Day three is that green, like doji top thing. Shorts. Okay, profitable shorts cover. This is basically short covering, and then new shorts get in. Next day, shorts cover, shorts get in. So what you have is you have a short covering rally. And by the way, it's a profitable short covering rally. Let me make this a little bit bigger. These guys are making money, you know? There we go. So profitable shorts, where you have a big dip, short covering rally gets slammed down. Short covering rally gets slammed down. So this is all the makings of a classic bear flag, right? Big drop, some shorts cover, some shorts cover, some shorts cover, and then whoever's long says, no way, I got to get out. And they puke it. So there's your bear flag breaking, right? Day four, I said that already. And then the last one is a capitulation of sorts. You have more longs puking. And during this time frame, open interest goes from 444 and change to 438. The last 3 days are an up day, a down day that looks strong, and a big up day. All right. So the first day is interesting. It's the interesting day of the bunch. The first day is a big green candle, right? But and Randy, I just want to check. This number is right. The open interest really only changed by 800 lots or so on the
Yep.
20.
Yep.
Okay. So you have a big green candle here, completely engulfing this shitty day, which now looks like it's kind of like a fishhook thing, I mean, I wouldn't have seen it, and there's your green day, but the open interest changes by less than 1,000 lots. I think it comes in 800, right? Let me see. Let me move this.
Yes.
Yeah, it comes in 846 lots. So you have a rallying market with open interest coming in. That's the day that doesn't make sense in the pattern that I'm looking at. And I'm not going to extrapolate it into making it some really big important thing. But what it is it's shorts covering and the market turning around. And longs getting in as well. So in the fishhook concept, it would be everyone getting out. It's not perfect. If everyone gets out, and then you have some new shorts selling it as it rallies, and the old shorts are covering. So you have longs getting in, you have shorts getting out, but you have a day that's definitely a transition into a new cycle, a mini cycle, so to speak. The next day, when you take these 2 days together, the next day, let's do the next day first, is these 2 days, this green candle and this red candle with a long wick underneath, these 2 days are, and it's what I said they would be, and they actually are. These 2 days are people squaring up for the Fed. They're just like, I want to get me out. I have a lot. These shorts covering here, this sloppy cover short, it could be shorts from over here. You don't know. So, and then this day starts out, right? Opens, goes lower, runs into fresh buying, and then shorts. Oh, I'm sorry, starts here, goes down, runs into fresh buying, and then rallies, but remains down on the day. So these 2 days are big. New money putting bets on, old money closing. So this is, again, this is all about people squaring up and then putting on bets there. Let me look at this. Right. Down 5. Right. Everyone's getting out for the Fed with some stragglers getting in here. And then you have the 10,000 lots going up. All right. So here we go. That's the last day is Jackson Hole, 10 a.m. He talks, fresh buying and shorts covering. All the kids go back in the pool. That's it. And that's my market. That's my recap of the week. Oh shit. 5 more guys coming in. All right. That's what I just walked through. So let's go through the futures. So that's the first thing that I note is that there's nothing strange going on. But the buying, we have room to run higher. Okay. This is the futures. The futures says it's the usual gang of idiots selling, and it's the smartest money buying, or at least the most, not necessarily the smartest, but the money that sees the most flows buying. So you have in the down move, right? The market for the 5 days, the market was down, right? In the down move, managed money longs puke, right? Other reportables puke, and they're not dumb, but they're getting out, right? And they sell into the hands of bullion bank shorts covering, which is normal. That's not like panic it's normal. These are the weaker hands selling in the down move, and these guys are covering. You also have more weak hands selling, and that's managed money shorts, and other reportable shorts are not necessarily weak, but managed money shorts are selling. So the momentum sellers are coming in. Momentum sellers coming in. Okay. And who else do you have buying? The long bullion banks are adding on the dip. I've seen this like four weeks now. Not necessarily 4 weeks in a row, but 4 weeks. It's happening in more frequency. And the open interest changes here are starting to just empirically or in absolute terms rival the open interest terms here. So this is like, 30%. It used to be like 20% and 10%. So this is good. So who do you have buying here? Taken together, you have the bullion banks that play from the short side are covering shorts, and the bullion banks that play from the long side are getting long. So not necessarily the smartest money, but the most informed money is buying. And I have a couple conclusions that I make from that, but we'll come back to that. All right. So then I looked at futures and options net because I wanted to see if it was cleaner or not. Because I'm wondering about these other reportable guys here. And sure enough, the other reportables didn't really get short. Because when you add their gamma in, the longs got out. These shorts continue to add. This is the dumbest money on earth right here. Right here. Now they're making money, but in the big moves, they're the dumbest money on earth. Longs got out, fine. Shorts got out, and longs got in. And by the way, these guys bought options. The long swap dealers bought